Executive Vice President at the National Taxpayers Union, Brandon Arnold. Good morning.
Morning.
Now, it's been well over a month that the stock market has been pretty versatile. Every time I think it's going to slow down, it just becomes more and more unpredictable, it seems. I mean, when you think about inflation and how it's ever increasing and we're seeing the reaction to inflation, do you expect things to finally wind down anytime soon?
Well, I sure hope so. But unfortunately, I think we have a lot of policies coming out of Washington that are disrupting markets and are increasing prices. And I'm speaking namely of tariffs. When we're talking about imposing new tariffs, guess what? Markets tend to go down. When Trump is talking about alleviating tariffs, providing exemptions, or going maybe a little bit less than he originally stated, then markets go up. So it's not really rocket science here. If we move away from this tariff strategy more to the great policies that we saw in his first term, like taxes, lower taxes, and deregulation, all of those types of policies are going to be good for markets, but more importantly, good for average Americans who are really struggling right now in this economy.
Brandon, is that fair, though? I mean, there's been a lot of prognostication about how tariffs were going to, basically crater the stock market, and we haven't seen that to this point. Can there be a situation where Trump's tariffs actually add value to the stock market? I mean, we're seeing other countries have a pretty seismic reaction, and we're seeing more investment in the United States as a result of these tariffs. Can it actually be a good thing in the end?
I'd be very surprised if tariffs provided any kind of economic gains to this country. What we're talking about doing is disrupting markets, disrupting supply chains. We saw during the pandemic what happened when we disrupted supply chains. Prices skyrocketed. Even if you're onshoring those supply chains, it takes a long time to reorient the way that you're obtaining raw materials or intermediate goods that are used in American manufacturing. And when you do so, you're increasing the price necessarily. So tariffs are designed to disrupt. They're designed to increase prices, and that's exactly what we're seeing here. And I think that's what we're going to see for a while. We need to pivot away from this tariff strategy toward those low taxes that he did back in 2017, one of the best tax bills that we've seen in a long, long time, that created more incentives to produce stuff on American soil and really help this economy grow. That's what we need to get back to.
I think you're right. We trust Donald Trump on the economy and certainly the tax plans, and I think there can be a situation where tariffs can add some value. But sticking with that tariff speech and evaluation, even before Trump announced the levies on automobiles and the imports there, Hyundai has announced it's investing tens of billions of dollars to move manufacturing into the United States, with the new tariffs set to take effect April 3rd. Do you think, Brandon, that we will see more foreign companies make similar decisions as a result of these tariffs, which is the point I was making earlier?
Yeah, we may see some more investment in this country, but we have to also look at the big picture here. Even if we're making stuff on American soil, if they're using imported aluminum and steel and other products, which they likely will, they're paying a higher price, and therefore the car prices could end up being higher as a result. So there's still a price to pay even for that onshoring. Yes, we want to encourage as many companies as we possibly can to produce domestically. That's a good thing, and obviously that creates jobs and growth for our economy. But the best way to do so is with carrots. We had carrots in the 2017 tax law, encouraging businesses to locate to America, encouraging people to make investments, capital investments, research and development. All those policies, unfortunately, are starting to expire. Some have already expired. We need to make those permanent. Those carrots are what's going to encourage more growth and more opportunity for American workers. I don't think the sticks are nearly as effective.
I want to move on now quickly to the Securities and Exchange Commission onboarding members of the Department of Government Efficiency, aka DOGE. Now, it's giving them access to networks, systems and other data as well. But the decision comes after the SEC members were offered a $50,000 payout option. So what do you think DOGE's introduction will mean for the commission?
Yeah, I mean, listen, I applaud a lot of the work that DOGE is doing here, downsizing the federal government. And as long as they're operating within the confines of the law, that's phenomenal, because the government has gotten too large. We've spent way too much money. What I'd like to see is Congress get more involved in this process as well, because that will help avert any kind of judicial action to overturn DOGE's actions. And that's been the concern thus far. They've come in like a bull in a china shop, which was very needed in Washington, but we're starting to see courts unwind that. So Congress needs to get involved, lock some of these changes into law via statute to make sure that we can permanently reduce the size of the federal government.
Brandon Arnold, we appreciate your time this morning. Thank you so much for being with us.
Thank you.